Welcome to this explainer. We are jumping right in today to break down BKV Corporation's record-setting second quarter 2026 earnings, and we're going to objectively analyze their stock valuation. Look, we are looking at a company that is essentially trying to rewrite the entire playbook for how a modern energy company operates. They are merging natural gas extraction directly with power generation and carbon capture. It is an incredibly ambitious strategy, and honestly, the latest numbers give us a massive amount of data to see if this whole thing is actually working. Here is our roadmap for today. First, the closed-loop strategy. Second, Q2 2026 record financials. Third, upstream and operational efficiency. Fourth, stock valuation and market data. And finally, power expansion and CCUS growth.
All right, Section 1, the closed-loop energy strategy.
So you might be wondering, what exactly is a closed-loop energy company? Well, to understand BKV, we really have to look at how they operate completely differently from traditional producers. They aren't just drilling for gas and tossing it onto the open market. This closed-loop concept is gaining some serious traction right now, especially with the surging power demand we are seeing in markets like Texas. Think about it. Traditional energy is heavily fragmented, right? One company drills, another transports, someone else entirely generates the power. BKV? They are bringing all of that in-house.
It's all about what they call a molecules to megawatts approach. The crucial point here is that BKV controls the entire value chain. By integrating natural gas production, midstream infrastructure, power generation, and carbon capture into one seamless system, they are capturing profit margins at every single stage, literally from the wellhead all the way to the power grid. And they're doing this while also managing their environmental footprint. This kind of ultimate vertical integration is exactly what insulates them from the typical boom and bust cycles that standard drillers have to deal with. And you can see how their corporate structure is expanding massively beyond just upstream extraction. They are the largest natural gas producer by gross operated volume in the Barnett Shale. We're talking about 6 trillion cubic feet equivalent of total proved reserves, which is just a staggering scale of supply. But here's the kicker. They are leveraging that immense supply not just to sell gas, but to fuel their own power plants and create a fully integrated energy brand. Moving on to Section 2, Q2 2026 record financials.
Now let's look at their latest earnings report and see exactly how this integrated strategy translates to the balance sheet. Because, let's be real, a great strategy is only as good as the cash it generates. BKV reported a record $142 million in adjusted EBITDAX for the second quarter. That's essentially their core operational cash flow, and it represents a high watermark for the company since going public. It clearly demonstrates that the financial engine of their platform is really starting to hum.
They also achieved a record $51 million in adjusted net income. What is absolutely incredible here is that this more than doubled their first quarter result of $22.4 million. And they pulled this off despite facing lower natural gas prices in the broader market. That right there, that is the exact insulation their integrated model provides.
Notice the efficiency going on behind the scenes. Their lower cash operating costs, which actually dropped 10% compared to Q1, along with tighter differentials, are directly padding their bottom line. With a 38.02% operating margin and a 14.05% return on equity, they are proving they can generate highly efficient returns on the capital they deploy.
Section 3, upstream and operational efficiency.
This kind of financial success doesn't just happen by accident, you know? It is directly fueled by major operational efficiencies in their upstream business, primarily out there in the Barnett Shale. They aren't just drilling, they're drilling smarter. By bringing all-in costs down to just $525 per lateral foot, they have essentially set the standard for major U.S. shale gas basins. At the same time, they've lowered their break-even points, particularly in the upper Barnett, which dropped to $3.25 per MMBTU. Plus, they are managing an incredibly low 11% one-year base decline rate.
Just look at the results. Across 22 wells, their advanced completions program has resulted in production that actually exceeds their base type curve. This means they are beating their own standard production expectations by 25% after 180 days. So, they aren't just drilling cheaper, they are drilling significantly better wells and rewriting the record books in the Barnett.
All right, Section 4, stock valuation and market data.
So, how does this record operational performance reflect in their stock valuation and overall market sentiment? Let's take a purely objective look at the data driving the stock and line up the bull versus bear indicators, some of the flags you might not hear about in everyday media. On the green flag side, we've got incredible momentum, record cash flows, a high ROE, and massive expansion in the Texas power grid. But flipping over to the red flags, we have to cautiously note some things the market is digesting right now. For instance, Upstream President Eric Jacobson recently sold 25,000 shares under a trading plan. Citigroup issued a slight price target downgrade from $36 to $33, and short interest is currently sitting at about 5.83% of outstanding shares.
Looking at the hard numbers, BKV has a market cap of $2.85 billion. With a trailing PE of just 7.26, this is where it gets really interesting. Automated models based on classic valuation strategies from legendary investors like Peter Lynch and Benjamin Graham are actually both flagging BKV as an upgrade right now. This suggests the stock might be significantly undervalued relative to its underlying fundamentals.
Still, it's vital to note the broader market realities. Why might analysts be slightly cautious despite those record earnings? Well, management themselves noted that they expect wider natural gas differentials later this year. On top of that, they have plans to reject ethane, which basically means leaving it in the gas stream rather than extracting it to sell separately, simply due to low market prices. These shifting commodity market dynamics are likely what's influencing these slightly more conservative analyst models, even with an overall moderate buy consensus on Wall Street. Finally, Section 5, Power Expansion and CCUS Growth.
So where is BKV aggressively deploying all that free cash flow for future growth? Look no further than their Temple Energy complex. They're executing a three-phase development to organically add dispatchable generation directly to the Texas grid. Phase 1 kicks off with 200 megawatts of modular generation, which is brilliant because it doesn't even need load interconnection. Phase 2 moves to a grid-connected private use network, and Phase 3 is a massive new combined cycle facility dubbed Temple 3.
And they are already replicating this exact model. They've secured 6,200 acres in Jack County, Texas, to build a second energy complex right near the Dallas-Fort Worth Metroplex. This strategic expansion is heavily targeting the massive, insatiable power demands of AI infrastructure and data centers. Between Temple and Jack County, BKV has the potential to add 1.4 gigawatts. That brings their total generation to nearly 3 gigawatts. To put that into perspective, that is enough juice to power roughly 600,000 homes.
Concurrently, they are fully closing the loop with their carbon capture business. They now have 3 active projects injecting CO2 with 400,000 tons injected to date. They are targeting a run rate of 1.5 million tons per year by 2028. Crucially, they are receiving 45Q federal tax credits for this. That means they are literally getting paid $42 to $48 per metric ton by the government to safely bury this carbon, completely proving the immediate economic viability of their environmental initiatives.
CEO Chris Cownan clearly believes that their unique ability to offer a one-stop shop for natural gas, power, and carbon solutions is a massive differentiator. And frankly, you can see exactly why he is so confident. They can walk into a room with a massive data center operator and offer the fuel, the electricity, and the carbon offsets all wrapped up in one tidy package.
With record profits, industry-leading efficiencies, and a truly unified platform, BVK is an incredibly fascinating case study. So we leave you with this to chew on. Is the heavily fragmented energy grid of the past officially dead? And is BVK's molecules to megawatts blueprint the ultimate and maybe only way forward? Let us know what you think.